Hi, this is Greg Downey. Recently, I was asked to speak in front of a large family office gathering in South Florida. In order to qualify to be a speaker, you had to have raised over $100 million or more in your career. We had individuals that had started and run hedge funds, there were commercial real estate folks. I was the only person there on the panel on the stage that actually had experience raising for early stage and pre-revenue companies. So what follows is that presentation. I had a lot of people that came up to me afterwards, said it was one of the best presentations of the day, and I hope this information is helpful for you. So stay tuned and hope you enjoy.
In a world where new ideas meet big goals and financial backing drives progress, we brought together some of the top minds and industry leaders at our annual Capital Raising Titans event. The remarkable success of this event was made possible by the expertise and commitment of our esteemed speakers. We want to express our deepest gratitude to Greg Downey, with over $200 million raised.
Greg's coming up on stage. He has raised over $200 million for pre-revenue clients. I know we have some high-tech, VC, blockchain, biotech, startup healthcare, health tech groups in here today. So I think many of you will appreciate his talk. And sometimes the best idea you might get the whole day, even if you're in health tech, might be from someone talking about land deals and how much they raise capital for land deals. The strategies for raising capital can cross over to many of the niches that you all might be in, whether the topic is exactly what you're raising capital for or not. I hope you're getting a lot of takeaways from all these speakers. So let's welcome Greg up to the stage.
I appreciate you making time for me today. I started Perm Ventures in 2010. We're located in Sarasota, Florida. We operate globally. We're highly specialized in pre-revenue, early stage companies. We're in high tech and real estate. We have a large base of customers and we deliver pretty strong returns. We've commercialized a lot of technologies over the years. So we bring that to the table when we work with our clients. It's not only bringing the capital, but we bring the commercial expertise as well. So today I'm going to talk to you about the four foundational principles to raising capital for startups and pre-revenue companies. How many people here in the audience have done a startup with their own cash or are currently raising capital for a pre-revenue company? Okay, great. Well, hopefully this information is helpful for you. And I'm sure this audience here that's raised money is probably going to relate to quite a few of these regardless. So the key things you want to focus on really are grabbing the attention, piquing interest, which is key. You want to bury people information too soon. Get to the point and be persistent. So let's jump right into this. So grabbing attention. Nothing drives me more nuts than when someone says me, wants me to check out a URL of their company, but the email is an AOL account, right? So if you got enough money to buy a domain name and put together a website, use the email that's associated with your company. It just looks professional. Get a professionally done logo. Like you can get those done cheaply now with folks like Fiverr and other 99 Designs and other folks. So get a professional logo, make your email look good, make sure it's all consistent and it looks like you're an 800-pound gorilla. So the other thing is a one-page concise executive summary. This is typically your first piece of marketing that someone's going to see. It's very difficult for entrepreneurs to get all this on one paper. Sometimes they got to shrink the font to 8, and I would not recommend that. The best thing to do is to put yourself in the investor's shoes and think about what do they need to see? What's important to them? Not necessarily what's important to me as the entrepreneur, but what's important to them, and start that way and be concise and realize that this is a teaser document. Be clear about your market size. Be clear about your opportunity, the product, but be clear about your market, the compounded annual growth rate, your initial focus, right? If you're in energy and you can have a thing that makes dirty energy cleaner and more efficient, you can go after everything, right? Well, don't do that in your summary. Focus on the low-hanging fruit. Identify the market, but show me where you're going to get to first. We have a client right now that has quite a big opportunity in energy. Their first focus is helping solar, so that's the focus. And also know your competitive advantages. How do you stand out? How are you going to beat your competition to the punch? Also, include what's in the investment amount. What are the terms? What's the return on investment? And when am I going to see my money back? Make sure you have that in there. Most investors doing early stage stuff, and maybe with these other folks as well, it's typically 5 years. So if you can show me how to get my money back with a strong ROI in 5 years, that would be helpful. Also, if you're pre-revenue and you have a small team, which is usually the case, add advisors. put bios together. I would send an executive summary and a bio sheet, right? Executive summary is 1 page, but you can have advisor bios, and maybe that's 3 or 4 pages. But short bios, to the point, very relative to your deal. And if you have any gaps, get advisors, put them under agreements, build your base so you look stronger than you are. Also, the 2-minute videos, right? Do something less than 2 minutes if you can. We're very good at distilling down opportunities once we get hands-on with clients. If we can distill it down 2 minutes or shorter, we put it into a little teaser video. That's always good to get your message across. It helps with customers. It helps with investors. But consider doing that because it's 70 times more likely that someone's going to watch a video than actually read a document. Next is piquing interest. So keep in mind that you are here to get the date when you're initially reaching out to investors. You're not going right for marriage. I get emails on LinkedIn that have 4 or 5 paragraphs. It's got 5 or 6 attachments. It's definitely canned and cut and paste. That doesn't work. I don't recommend it. I've never done a deal that way. I want someone to kind of get my attention and build a relationship and bring me along through the process. Guard your intellectual property, whether it's actual IP or it's trade secrets or it's a customer database or what you're doing from a competitive standpoint. Know what to bring and what to share that's not confidential. But if something gets confidential, get them under an NDA. Most investors won't sign one until they've actually expressed interest. So you got to be able to share enough information to get them excited. So that is, I tell clients, build a confidential deck and build a non-confidential deck. So build all your stuff in there, all your confidential stuff, and then once that's done, we strip out the super confidential stuff, and that we have a marketing piece and a teaser, and that's also appropriate. Use a data room, whether it's SharePoint or Box, whatever it is. Use it because investors want to see things nice and tidy in the right folders so they can then do due diligence on you. Don't be shooting emails back and forth, a bunch of attachments unless they ask for it, but use a data room. It also allows you to track who goes in and out. Also utilize testimonials. If you've got industry leaders, potential clients, strong advisors, people in the industry that say this is great, they love it, have them get a testimonial. Get a testimonial on paper and use it in your collateral. It builds credibility. And then leave them wanting for more, right? Don't bury them with everything, all the documents you have and everything you have from a collateral standpoint. Give them what they need, and that's it. And suggest an in-person meeting or a Zoom meeting. Next is getting to the point, right? So if you're sending an email out to somebody, don't write a love letter. I've seen these emails that are 4 or 5 paragraphs long, and it's just you glaze over. Be precise. I mean, we have an 8-second attention span nowadays. It's like the equivalent to a goldfish. So get to the point quickly. Email should be the same, 1 to 2 paragraphs. LinkedIn is like 2 or 3 lines max. But talk to people as they're a peer, not as a pauper, like you're desperate. Talk to them as a peer. How would you want to be talked to? Hey, I'd like to get your opinion. Saw your background. It's very impressed by it. I'm working on something I'd love to get your opinion on. That's it, right? You just want to get that next communication going. Be respectful. Answer what investors want to know before they ask. Okay, so if you can map it out the right way, you can be very precise. We have a client that we have a video testimonial on that has never raised capital before in his life, had a great opportunity, put it together, and he raised close to his first investor within 30 days of working with us. One of his comments was the deck answered every single question. So he literally made the decision on the phone and invested within 24 hours. So it helps. Have a detailed 5-year pro forma. Use a summary as well. So you have a full pro forma, have it professionally done, but then be able to take your top line revenue, take your COGS and all your expenses, and then have your bottom line, your EBITDA. Have that out in a 5-year that you can share with someone really simple without sending them a whole Excel file. Show them where the money goes and how you grow it. When asking for capital, this is critical. You talk to people, say, how much money do I need to take my company where I want it to go in 5 years? Oh, it's $20 million. It's like, okay, well, what do you need for the next 18 to 24 months, right? Because if you're pre-revenue and you're trying to raise $10, $20 million, you're going to pay through the nose for it, and you probably won't get the capital. Show investors, if they give you a runway of 18 to 24 months, what you'll do with it and what milestones you'll hit, and go do it. You'll get them back at the trough to put more capital in when it's time, and you'll get their friends. So that's how you play it, and that's how you keep your capital and your equity. Suggestion is leave your valuation off and out of the initial talking points. And this is the stickler for most investors, right? They can love a deal, but they see a valuation. If they don't agree with it, they're not going to follow up with you. So just leave it off. Know how to defend it, know how to calculate your valuation, be ready to argue your point, but leave it off because it is a negotiation tactic. Last thing is be persistent, right? Don't follow the herd. Persistence wins in this game. If you're raising $5 million or less, focus on high net worth individuals. There's angel groups out there. There's family offices, but know how to approach them, how to communicate with them, how to get them right materials. If they say, hey, load stuff up on my website, go ahead and do it. But then research their group, find out who the contacts are, who the key people are that makes sense for you. Contact them on LinkedIn, try to contact them directly, suggest that you're in the area, maybe get some cup of coffee if they're close by. I did this early in my career when I was raising money for an orthopedics company. I was in Indiana and I had to fly out to San Francisco, but my emails would say, hey, I'm going to be in the area next week for 3 days. Would love to get together for coffee. I didn't even book my flight yet. So once I had those dates, I booked my flights and then I had great meetings. But it's just less invasive if you just say you're casually going to get together. Also, if you're pre-revenue, secure testimonials, non-binding letters of intent, and pre-orders with customers as best as you can. They go a long way when you're pre-revenue. Leverage your attorney, your CPA, bankers, advisors, right? You have to tell them what you're doing. Let them review your stuff. Tell them what you're doing. Ask them if they know anybody. Let them open their network to you because they should. And last and not least, if you have the opportunity to get a hands-on coach or mentor to teach you this stuff on how to do pre-revenue early stage companies, do it. There's a lot to learn. There's a lot you can bump your head on, a lot of landmines, things you need to watch out for. I learned it the hard way. And so, if whether it's with me or somebody else, if you can get someone to work with you during that time, it will greatly increase your success. Hey, I hope that information was helpful for you. Hopefully some information there you can apply to your own business and your own strategies. Hey, if you're looking to raise capital for an early stage or even a growth company, we'd love to chat with you. We're not your typical VC. We do a lot of interesting things in a number of different sectors, a lot of venture growth, even work with a lot of early stage pre-revenue companies. So if you've already booked a call, I'm looking forward to chatting with you soon. If you haven't done so already, look somewhere around this. You'll find a link, book a time on our calendar, and I look forward to talking to you soon. The first call is for free, so you got nothing to lose. We'll talk soon.